Good evening. Um, being last is definitely a bit of a blessing and a curse, but at least I see some recognizable and smiling faces, which is definitely nice. My name is Truzar, and I come with Chelsea Hunt over here from the University of Waterloo, Canada, and where both of us are doing our research on the fossil fuel divestment movement. So we have slightly alluded to fossil fuel divestment over the course of the last 2 days, but we'll kind of go into a bit more detail. And really what we'll be talking about today is progressing into the future with the fossil fuel divestment movement. We should really look at how it was played out in history in the context of the Apartheid and see whether or not we can tailor the Apartheid divestment movement to be a bit more appropriate for the fossil fuel industry. So we're here to share our findings today on a comparative analysis between the two campaigns. So really, overview, basic idea, divestment is a form of socially responsible investing in that it adopts exclusionary screening practices against certain investment practices. It's a socially motivated investment practice where it really aims to realign capital given an investor's moral or ethical ideologies. And the real intention is to coerce some sort of transformative change, whether that be through politics, financing, or a tarnished reputation. So it was most famously applied in the context of the South African Apartheid, the human rights violations seen over there, and recently it's been applied again to the destructive influence of the fossil fuel industry. And it was cool to see the 80% damage of anthropogenic climate change from the fossil fuel industry in your slide there. So what we really want to see is if the successes could be replicated, perceived successes rather, could be replicated, and how that would be done. So going through our literature, we found a few main common goals that kind of transcended across both campaigns. And the first three that we have over there are political action. We want to coerce some sort of political response. Financial action, whether that's limiting financial capital, augmenting the cost of capital for the transgressing institutions. And then reputational action, which is really just to kind of raise awareness of the issue and by doing so undermine their ability to continue on with their transgressions. The last two, fiduciary approach and business approach, really goes back to the socially responsible investment idea of any investment must do both well and do good. Do well competitively, make sure there's some sort of financial return, and doing well by actually having some sort of value added to pursuing it. So divestment is a form of SRI, as I mentioned, in that it includes exclusionary screening to identify the transgressing institutions. However, socially responsible investing in itself is not divestment. Socially responsible investing originated in religious institutions and has since evolved to kind of integrate non-financial considerations into financial decisions, while on the other hand, divestment is not socially responsible investing in that its core purpose is really to raise awareness against some sort of injustice. Okay, so our research question is really to compare the two campaigns, look for similarities and differences between the two. And overarchingly, what we find is that both campaigns do work to raise awareness against the injustice, but they do differ, again, overarchingly in their strategy and outcome. Going forward, what we'll do is we'll actually look at each one of those 5 goals that I mentioned before and kind of highlight how they differ across each one specifically. So when I talk about strategy, I'm specifically talking about the fact that in the context of the Apartheid, we were really going against the government, while in the context of fossil fuels, it's the industry that's the main culprit. And the anticipated outcome is, while we were actually trying to collapse the Apartheid government, we're probably not trying to do that with the fossil fuel industry. Okay, so our method is, we did a content analysis where we used literature and compared literature across the two campaigns in the context of socially responsible investing, and those are kind of where the goals came from as well. We used academic sources from aggregates like JSTOR, Google Scholar, industry reports. I think we have like asset management firms and a few accounting firms, Mercer, CDP, organizational websites, so 350.org, for example, Institute for Sustainable Development. News sources came from Wall Street Journal, so on, and public data portals for just a slight bit of primary data kind of sprinkled on top. Okay, so kind of going back to our hypothesis, what we talked about, the real purpose of the apartheid divestment that actually lasted from late 1970s to the early 1990s, and specifically the greatest protests and media coverage were between 1984 and 1986. The purpose was really to raise awareness against the human rights violations we saw in exploitation, repression, inequalities, both financially and structurally, and really the institutionalized racism and classism that the apartheid divestment was propagating. So again, as I mentioned, the strategy was really focused on the government and in a sense to end the apartheid regime, and the outcome was to absolutely abolish the transgressing government at the time. The context of fossil fuel divestment started in 2012. Actually, just this Tuesday was a big day. It was the 3-year anniversary of the first divestment commitment, and $2.6 trillion has been committed to be divested away under assets under management. So that's it's getting there, and it's growing fast as well. Again, the purpose is really to raise awareness against the destructive influences of the fossil fuel industry specifically. The strategy again is not to collapse the institution, it's to coerce specifically the institutions to prevail in a more responsible and cautious manner to the influences of climate change. So, really quick overview of like all the results. We'll walk through each one specifically, but really what we're asking is, what exactly was the role of government in the context of financial action? Was there an impact in terms of its aim to limit capital? Can awareness actually coerce some sort of change? Has it coerced change in the context of the apartheid? And in the context of fiduciary duty, again, really, will it be competitive? And is the final result like negligible, or does it really have some sort of value to it? Okay, so we'll get into the sort of meat of all this stuff here, and again, we'll go through all 5 of the common goals to kind of highlight how they are comparable and different in the context of the South African apartheid and fossil fuel divestment movement. So, in the context of the apartheid, it was an interesting case because it was foreign regulations and foreign investors who decided to divest away from the incumbent government at the time, and specifically they divested away from industries with the intention to weaken the economic power of the government. In terms of effect, it was perceived to be mostly ineffective after the African National Congress came into power in 1994 and enacted a lot of competition regulations and the black economic empowerment practices. Overall, across the following years, there really wasn't much growth in terms of improving inequalities or so on and so forth, and we'll talk about that later on as well. In the context of the fossil fuel campaign, we really want to encourage governments to focus, and rather than have a foreign government try to influence. We're trying to get all international governments to kind of introduce measures of like market measures, taxes, subsidies, command and control systems for output quotas, for example, and even reinvestments in more sustainable practices. The biggest problem here really is that there are deep ties between the industry and the government, so that might be a bit of a challenge. So really, we kind of highlighted the similarity, but the difference here is really that we were trying to use divestment as a means to abolish the incumbent government. However, in the context of fossil fuels, is to engage them towards an end goal of affecting the industry again. Okay. So financial action. Interesting case in the context of the apartheid. We had the Barclays boycott as well as the End Loans to South Africa campaign, which were both perceived to be really successful. In the context of the Barclays boycott specifically, it actually led to £6 billion of closed retail accounts at home, which eventually led them to reconsider continuing their investments in South Africa. However, when you actually look at the effects of it, we notice that across the 1970s, investments continued to increase it was about $7 billion of continued investments, and only in the 1980s, when there was a devalued rand and increasing political risk and so on and so forth, where these individuals actually decided maybe it's not a good idea. So I guess what I'm getting at there is maybe there would have been a flight of funds, regardless of if there was a divestment push or not. In the context of fossil fuel campaign, again, it's the same idea. We really want to augment the cost of capital. However, right now, in its current standing, we're mostly targeting the institutions, and we don't actually focus on the financial intermediaries alone. Sorry. So what might be interesting going forward is to kind of reassess who we're focusing on. There is market forces, which aims to focus on identifying the financial intermediaries that are most financing continued investments. However, these investments are mostly, these financial intermediaries are mostly located in the UK or Australia. Okay, reputational action. So we highlight three main points here in terms of reputational action. It's really to raise awareness. As I mentioned before, 1984, 1986, we had increased protest media coverage during the apartheid campaign. It's to have a comprehensive list of who the transgressing institutions are. So the Investor Responsibility Research Center highlighted the list of transgressing institutions in the context of the apartheid. And finally, there was a scrutinization measure to identify the proactive versus the complicit firms, specifically in a sense, the Sullivan principles. This was actually perceived to be really successful. If you look at the consumers, 1 in 4 consumers actually viewed South African campaigns as tarnished. They stopped stocking them in stores. Investors adopted some sort of measures to identify who these companies were, and eventually the institutions responded as well. Between 1984 and 1987, 94 of the 350 institutions withdrew from South Africa, and the rest of them adopted the Sullivan principles. So it was perceived to be successful in that context. Fossil fuel campaign, really similar again. We have the 350.org movement. Great at raising public awareness. I think we've mentioned the New York People's Climate March. Fantastic. The last year after the climate march, we had $50 billion the following day in commitments for divestment. So, these sorts of campaigns do work, and I think it's important to respect divestment for its value in raising awareness in these sorts of these sorts of considerations. However, we don't have a standardized system. I know I have been specifically talking to a few people around here that are trying to identify, who the proactive versus complicit companies are, but there really is no standardized system yet for that. So I think that's something that we could possibly work on in terms of reputational action. In terms of the effect, consumers still need fossil fuels, so it's a bit of a hard sell to say, we can't continue that. And on the context of the institutions, it was easy for a company like Coca-Cola to say, okay, we are going to withdraw our business operations from South Africa, but to tell Shell to withdraw their business type from fossil fuels or in another example, to tell Philip Morris to withdraw from the tobacco industry is a bit of a harder sell. So, for the differences, the firms were able to withdraw their operations, and there were reputational impacts. However, it's difficult to convince, again, fossil fuel industry to change the way they run, as well as the fact that we still depend on them. So, again, a hard push. So there was a really interesting study, before I get into the fiduciary duty and the business approach part, there was an interesting study done by Great Benson and Sarati this year, which basically looked at all the rejected campaigns, and basically stated that the two largest issues were that it would cost too much or the impact would be negligible. So that kind of highlights the next 2 points. The fiduciary approach, really, on both cases, there's the argument that there's going to be reduced diversification, increased transaction costs, and overall lost revenues. However, on the other side, there is also the case for improved risk management through integrating non-financial considerations, into their decision making. When we look at the effect, there really is no right answer specifically. Eccles highlights 5 main event studies analysis that were done to identify if commitments for divestment during the apartheid made a change on the stocks, and 2 of them said there was a positive change, 2 of them said there was a negative change, and 1 said there was no change. So it's really not clear. Rudd and Grossman Sharp looked at the South African Free portfolio performance, and again, same idea. One said there was underperformance, and the other said it was overperformance. So it's really not very clear. Same idea with the fossil fuel industry. There were 3 papers released 2012 and 2 in 2015 that all highlighted that divestment would cost millions of dollars, hundreds of millions of dollars in damages. Full disclosure, those were all commissioned by the petroleum industry, but on the other side, there still are other research papers, especially by asset management firms, that highlight that it could be competitive. Moreover, if anyone could guarantee that a stock would outperform another, if one portfolio would guarantee outperform another, we would really not need conventional portfolios anymore. So it's understandable that there really is no right answer. However, the real difference here is that the threat comes from social versus environmental perception. Okay. Finally, the business approach, and this is kind of where I'll highlight the issues of the South African apartheid overall. Is there were significant human rights violations that were really indisputable. If we look at some of the numbers. If we look at some of the numbers, per capita income was 12 times lower for the non-white community. There was significant displacement of homes, 538,000 shortages for the non-white community, and some numbers which were just ridiculous, like 700 people per tap and 66 people per toilet. So a significant case for divestment in that context. Interestingly enough, there were 2 studies done afterwards, and both of them found that per capita expenditure and poverty rates both increased from 1998 and 2000 were the 2 studies, and post-apartheid it didn't look very promising in that context. From the fossil fuel campaign, same idea, except it's a bit of a weaker case where there's really no clear answer across the board that this is something that's crucial. McGill, for example, argued that they were unconvinced of the social injury. Swarthmore suggested that the time and circumstances were right for collaboration, and Harvard said that it was hard to reconcile our reliance with fossil fuels with the refusal to countenance any relationship there. So again, there's a really strong case. One other point. There were fewer reinvestment options other than South Africa free portfolios, and a strong housing market. In the context of fossil fuel campaigns, there's a bit of a stronger case for reinvestment in renewables and such as well. Okay, so again, just to kind of like bring it all together again, as we mentioned, really it's a way to raise awareness, and it should be kind of respected as such. The main difference is we're focusing on overthrowing the government versus managing the transgressing firms. We will be focusing a bit more research going forward at the University of Waterloo, focusing on the financial aspect, so the effectiveness of divestment commitments as well as portfolios, and then going even further, you know, how exactly can we make these fossil fuel divestment campaigns more effective? And that's it for me.